I'm just here to introduce you to Peter Blanc, our keynote speaker this morning. Now, Peter started his career in underwriting and then moved over to the lighter side, the bright side, and moved on to broking, and eventually led a management buyout of the UK commercial division of FAR in 2000, which he named FMW Risk Services. Very creative. And grew the business and sold it in December 2007 to Oval, became Oval's CEO, and then sold that on in 2012 to Gallagher's, which completed in 14. Sorry. He then, a year later, concluded a management buy-in of Aston Scott and led the merger with Lark Group in 2017, and the rest is history. And he's now running Aston Lark with more than 1,500 staff from offices across the UK and Ireland, writing apparently over 800 million of premium. Billion now, sorry. What's 200 million? They're PE-backed. He's also non-exec chairman of Hastings Insurance Services, the broking side of Hastings, and up until recently served as chairman of the Large Brokers Advisory Board at the British Insurance Brokers Association. Peter's currently deputy president of the CII and has been elected president for next year. I'd like to find out something interesting about our guest speakers before introducing them. And so we went out to the market to try and find some, not dirt, obviously, because I couldn't talk about that. And, do you know, there's almost nothing out there on him. But what I did discover is, despite his diminutive physical presence, he used to play American football, would you believe? And he was a cornerback, not that I have any idea what that was, but he used to play American football. But perhaps, as he just said to me, perhaps the fact that he is the size that he is why he stopped. Anyway, I'd like to introduce you to Peter Blanc, and thank you.
So good morning, everyone, and thank you, Charles, for that introduction, and thank you, Mike Keating, for inviting me along. He phoned me up a few months ago and said, Peter, would you mind speaking at the MGAA conference? He said, it'll all be on Zoom, it's all fine. So I said, yeah, that'll be fine. Then a few weeks later, he phoned me back and said, great news, it's virtual. We've decided to do it in real life, so you'll be in front of a massive auditorium. So thanks for that, Mike. That's what you call a proper full-on hospital pass, so thank you. So I think I'm the first insurance speaker for about the last 18 months that's actually had to do it live. So be gracious with me if you can. So just a couple of words about Aston Lark. It'd be wrong not to get a few little quips in. And I want to talk about our experience of buying brokers, which will hopefully frame what I want to talk about. Since merging Aston Scott and Lark back in 2017 to form Aston Lark, we've acquired nearly 40 brokers across the UK and Ireland, and we now have 54 offices with over 1,500 staff. So placement strategy is, of course, one of the main topics of conversation whenever we're buying a broker. So I think it's given me a really good insight into how brokers think about placement, why they choose the markets that they choose, and hopefully I can share that with you from an MGA perspective. So what are the typical broker placement strategies that we see in the market? Well, by far and away the most common picture is that brokers tend to have at least 60% of their book placed with the traditional composite carriers, very uninventive. Basically, everyone that begins with A, that's kind of that is 60% of everyone's book. Aviva, Allianz, AXA, that's kind of that's the way it works. 20% with second-tier carriers, not necessarily that they are second-rate, just second-tier, smaller carriers. And then the remaining 20% tends to be with the MGAs, wholesalers, specialist class of the business. And that spread hasn't really changed much in all the time we've been looking at brokers. It just doesn't change. And it actually reminds me back in 1999, some of you may be old enough to remember a chap called Tony Cornell. Tony Cornell was a real industry character. I think he was with GA and Norwich Union originally, and then he became a bit of an industry commentator. And I got him in for a session in my first broker to actually talk to all of us about, look, what strategy should we go through? How should we grow as a broker? And his advice was, he described the insurance markets falling into two camps. The old money markets, such as the big composite carriers, who in the day were the Norwich Unions and General Accidents, and the hot money markets comprising the MGAs, wholesalers and small insurers. And his advice to me as an up-and-coming broker was to use the hot money markets to grow your business and then educate your clients and convince them that long-term they'd be better off with a composite carrier, at which point you switch them across to the old money markets. And actually, I think that many brokers follow this strategy now without necessarily even realising that that's what they're doing. And it's just because of a few sort of fundamentals, which when you think about it, of how brokers go about building their businesses. When you're trying to win a new commercial account out in the market, you have to have an edge. You have to have a differentiation in order to persuade that client to appoint you instead of their incumbent broker. Virtually every broker in the land deals with Allianz, Aviva, AXA, etc. So getting a differentiated quote from the big composite carriers is kind of impossible. So MGAs perform a super valuable role for brokers in these situations, often providing brokers with differentiated quotations, enhanced cover, suitable for a particular niche that the client fits into, enabling the broker to win the business by providing the client with a better overall price and product. But then the life cycle of a broker-client relationship kicks in, and in future years, once the broker and client relationship is bedded down, they trust each other more, and the broker has to turn up at renewal with a different story. If you just keep rocking up at renewal and saying, yep, the thing I recommended back in 2000, yeah, still good, we're just going to carry on renewing with that one, eventually the client will go out to tender. They just do, because they start to think, hang on, this guy's being a bit complacent and just not really coming up with anything new. So, and as you'll appreciate, the main reason why many clients use a broker is simply because brokers are able to obtain comparative quotations from a wide range of insurers, which a client simply could not access on their own. So part and parcel of a broker's job is to obtain alternative quotes, prove to the client that they're doing their job, covering the market on their behalf. When a broker's not under competition from another broker, it's far more likely that they can have a sensible conversation with one of the big composite carriers without the fear of that carrier providing a similar quotation to another broker. So from the broker's perspective, unless they've got a particularly strong relationship with the MGA or there is another reason to stick with the MGA, they will at that point just see the MGA as being a means to an end. They've secured the business by placing it with an MGA, but it seems sometimes that at the earliest opportunity, when they're not under competition, business then tends to drift into the hands of the composites. And there are two big reasons for that. Composites tend to pay higher commission rates, and composites have brand awareness that goes down well with clients. And actually, again, if you put yourself in the broker's shoes, when they turn up at a renewal meeting, they've won the business by using the MGA, they've got the relationship bedded down with the client, and then a few years later they turn up and say, great news, I've been able to persuade Allianz or AXA or Aviva to take on your business. And in a way, the broker is trading off the brand strength of the big composite carrier. And that, as I say, is a real challenge, I think, for MGAs. Why do MGAs struggle to turn into old money markets? Why do brokers not reward MGAs' innovation by sticking with them for the long term? That, I think, is the big challenge. Winning new business always requires a differentiated product and a differentiated price. But retaining business for the long term requires fantastic levels of service or a brand reputation or the provision of a product that's truly differentiated on an ongoing basis. Market cycles also play a huge part in this. When markets are soft, underwriters' appetites grow wide, they take on risks which would previously have been out of appetite. But over the last couple of years, we've seen a complete reversal where underwriters' appetite have been dramatically curtailed whilst prices have risen. MGAs should, of course, be grabbing this market share opportunity with both hands, and I'm sure that everyone in this room would be doing that if they weren't constrained themselves by the general lack of capacity in their markets. From a simple broker's perspective, there does seem to be something super crazy about a market where underwriters are desperate to write a piece of business 1 year, and then 2 years later, the same piece of business with no adverse features, no claims, finds itself practically uninsurable. This does the insurance profession generally no end of damage. The vast majority of commercial enterprises that we deal with simply want two things from their insurance arrangements: budgetary stability and peace of mind. That's when you talk to once you cut through everything, that's all that most companies want. Believe it or not, most company directors don't go home at night dreaming about how they're going to improve their insurance placement. They just don't. They just know they have to have it. They want to find someone they can trust. They want to know that they've got a bit of stability in there, and they want to know with every fibre of their being that when the chips are down, the insurance policy will pay out. So as a market, I think the fact that so many clients change insurers so regularly, it's down to the fact that as a market, we're not delivering these two vital facets. Most clients would love to avoid annual renewals of insurance. I know that as a broker, if I could sign up our PI insurance for 5 years on a fixed rate, if there's any takers in the room, just for... Actually, 2 years ago would have been a nice time to sign up on a 5-year fixed rate. But that, to my mind, is where we should be focusing our innovation. Looking to deliver clients what they actually want, rather than just focusing endlessly on tinkering with long-standing existing products and services. If a broker could tailor a suite of products for a client that deliver them budgetary stability, true peace of mind, at a sensible cost, and they were able to agree 3 or 5 year deals, most commercial enterprises would be sorely tempted, because believe it or not, they actually don't much like having an annual merry-go-round and seeing 3 or 4 brokers and going through all the rigmarole of filling in proposal forms. Most clients hate it. Instead, we're delivering products that are often found to be not fit for purpose, prices that are through the roof 1 year, through the floor the next. Brokers end up trying to add value, in inverted commas, by simply shopping around each year, which arguably achieves the very opposite of what the client actually wants, which is long-term peace of mind. So look, the great news for MGAs is that composite insurer competitors can never be as nimble or as flexible as you. I'm a massive fan of niche MGAs who've chosen a sector, completely immersed themselves in it, such that the products and services being provided are truly differentiated. Brokers crave underwriters that help them do a good job in the eyes of their client. No client has ever thanked a broker for getting 20 no quotes, but every client expects a broker to come up with 2 or 3 interesting alternatives at least every 2 or 3 years, if only to justify their fees and to prove to the client that they're looking after them. This means that for MGAs, if you've got differentiated products and can provide a great service, you just have to find your way into enough brokers to grow your business. So how do you do that, and what's the state of the broker market? Well, this is where the data gets interesting. I can't take credit for a lot of this data. This comes from IMAS, who some of you may know, a corporate advisory firm in our sector. They tell me that there are now around 700 brokers in the UK with more than 10 staff, and a further 1,100 or so small brokers with less than 10 staff. So we're still nudging around 2,000 brokers in the UK. I'm afraid to say that buggers like me will carry on acquiring, particularly the larger brokers over the next few years. But despite all the headlines in the press, the net reduction in broker numbers is still relatively gradual. Each year there are typically 20 or 30 new startups, maybe 60 or 70 acquisitions. 2020, 21 have been particularly busy, but we don't think it will carry on quite that rate for the next couple of years. So it's worth spending a couple of moments talking about the different types of broker and the approaches that they take with MGAs. So starting from the bottom and working up, the micro brokers, as we call them, those with less than 10 staff. Nowadays, they struggle to obtain agencies in their own right. They tend to join one of the networks. And these brokers can be a goldmine for MGAs, as they tend not to receive fantastic service from the composite insurers. Getting an agency would be nice. Getting someone to phone them back would be even nicer. They really do struggle. The challenge is, of course, that their GWP levels are pretty low, and even if you become their best friend in the world, you will still, in all probability, only receive a few tens of thousands of pounds worth of premium for your trouble. Accessing them through the networks probably makes the most sense, but they are a goldmine, and if you've got a particularly differentiated product and you can find your way into those hundreds of small brokers and you can differentiate yourselves through something that the composite carriers aren't willing or able to provide, well, then they can be an incredibly lucrative seam of business. The next step up, these are the guys that, frankly, myself and PIB and all of the other acquirers, these are the guys that we get excited about. As soon as you've got more than 10 staff, you're right in the hot zone, if you like, of where the consolidators really want to buy these businesses. As a proxy, if you've got 10 staff, you've normally got £1 million worth of commission. You've normally got £4 million worth of premium at your disposal. So if you target brokers correctly that write the type of business you want to write, then there's no reason why high-quality relationships with brokers of this scale can't result in hundreds of thousands of pounds worth of premium. The challenge with this end of the market is that they are prime targets for acquisitive groups, And whilst we take a pretty pragmatic view about MGA placement, some of our peers are a bit more directional, shall we say. And you may find that you develop a book of business with a broker who then sells to a consolidator who then actively encourages the broker to move that business to one of their preferred carriers, which obviously can be pretty distressing for MGAs that have spent years cultivating and growing those relationships. So we then have the large broking groups and the consolidators like Aston, Lark and PIB and GRP. One of the main revenue uplifts that is generated through acquiring smaller brokers is simply that better terms and commission deals can be levered from carriers with whom we place many millions of pounds worth of premium. So it's true that the larger broking groups will always seek to maximise their placement strategy, but what's also true that in a hard market in particular, persuading large insurance companies to write the weird and wonderful is pretty impossible. It doesn't matter how big our relationship is with the market, they tend not to want to write thatched fireworks factories or anything that's a little bit challenging. As an MGA, provided you're offering a differentiated product, it's that word again, in a niche market that's not being targeted by the composites, then even though GRPs and the PIBs and the Aston Larks might be telling all the brokers, come on, support the preferred panel, if any of our brokers comes to me and says, well, we've got this niche and actually we use XYZ MGA, they will have my support every day of the week and twice on Tuesdays. If it's the right thing for clients, then it should always be the right thing for acquisitive broking groups. And actually, despite all the headlines, I actually do believe that the overwhelming majority of our colleagues and the overwhelming majority of people running big brokers do actually put clients first. They might not always seem like that, but I think they do. I think the challenge sometimes is that lots of MGAs have traded on price, they've ridden the cycle, and then they suffer as soon as the composite appetite comes back. It's all about carving out your niche. And then finally, we have the global players like the Aons and the Marshes of this world. MGAs can find surprisingly lucrative seams of business from these brokers, provided the product being offered is truly differentiated and needed by the global brokers' customers. But it's imperative that the MGA is using rated capacity, and that's also true for brokers like us. We just, we set a rule about not using unrated capacity, and we're sticking to our guns on that in that regard. And I'd encourage anyone, if you're setting up, I know it's challenging sometimes getting the rating, but as our PI insurers tell us, it's an absolute must for brokers to use rated capacity. So I think it should be a must for MGAs looking to develop broker relationships to have rated capacity. Because if you don't, the only brokers that will use you will be the ones that frankly don't care about things like PI insurance and chartered status and all that stuff, and they're not really the brokers you want to partner with, in my view. So what tactics do you use? How do you go about growing your books with these brokers? Well, there are loads of different ways of going about it. How does an MGA go about persuading brokers to place business with them? Well, a big and important part of the broker's job is being seen to offer clients alternative options. As I said earlier, if a broker just rocks up every year and says, hi, here are your renewal terms, they'll find themselves under competition pretty quickly. Clients expect more. They expect to know that the broker has price-checked the terms. They expect the broker to be constantly scouring the market in case there's a new solution out there that's relevant for the client. So brokers are a remarkably open door, provided your product and service are of interest to their clients. One other question you might have is whether to e-trade your product. We get a lot of incoming from MGAs, and they ask us, well, how best to access all of our broker teams. And as a broker, we long ago brought into the theory, we were sold the Acturis Kool-Aid that all of our needs will be fulfilled by just having this amazing Acturis machine. And of course, much as I love Acturis dearly, it's nonsense. It just is. If our staff just sat in their office and attempted to e-trade all products, we would not have a broker within a very short space of time, because the truth is that the e-trade solutions are fantastic for the plain vanilla sprinklered swimming pools. That's not a problem. As soon as you get any adverse features, anything that's a bit different, e-trade all kind of grinds to a halt. And I don't think we're alone in this. I think the e-trade panacea just has not materialised. Most staff report they can certainly run quotations through the e-trade system, but only in a minority of cases are they able to actually satisfy themselves that the terms are good enough and that all the I's have been dotted and the T's have been crossed. So we often find that the e-trade journey starts out quite good in theory, but ends up pretty manual in practice. So my advice is therefore to look at your product through that lens. If it really genuinely can stand on its own 2 feet in an e-trade environment, then great. But otherwise, you may find that differentiating your service comes up with different ways of helping brokers. Helping them to actually get quotes from you. Being innovative and most importantly, being rapid really can win the day. From a broker's perspective, having an underwriter they can submit a quotation request to, knowing that the underwriter will come back same day with a quote, it's just manna from heaven, believe me. I dread to think how many man-hours are lost in our business just chasing down quotations from carriers. I mean, it really is. If anyone landed from Mars and looked at a broker's office and looked at what they did, they just think this is just insanity. We are just wasting all of our lives contacting each other to get no quotes. My son has actually just started work for a big composite insurer, and a little bit down in the dumps about it right now. She said he spent half of one day just sending no quotes out. It's like, what's that all about? That is something is wrong in that environment if that's what we're doing. Over the years, I've developed very close relationships with a couple of cracking MGAs, and one of the main ways that those MGAs differentiate themselves is simply through speed of response. When an opportunity comes my way and I know that I can call the underwriter at the MGA and I know that they'll give me a quote, frankly, there and then, and I almost know in advance roughly what they're going to quote. I know, we know each other well enough, trust each other well enough that actually why would I want to go through the rigmarole of actually sending out presentations to 15 different carriers when I know I can get the solution I need there and then? But of course, it's only possible to provide that rapid service if you're operating in a niche where you really know your space, not having to reinvent the wheel for every customer. And it's also worth this. My brother actually came up with this photo. He lives in Australia and he's a designer. And some of the imagery that he comes up with is quite Australian. I'm sensing that's quite an Australian coat, because I haven't seen a claims adjuster in the UK dressed like that for quite a while. But it's worth spending a moment or two thinking about claims. Yeah, the large composite insurers have, in the main, they have got excellent reputations and brands in the market. Not always deserved, I would hasten to add. And I know that COVID business interruption has damaged all insurers' credibility. But it's still true to say that if you offer a commercial client a product with an Allianz, an AXA or Aviva, from a broker's perspective, you do achieve a bit of instant credibility. In effect, the broker is trading on the brand strength of the carrier. And that's something that an MGA really will struggle to do. So as such, MGAs have to develop their own brand strength. And the best way of doing that is to be super responsive and rapid at the underwriting stage, but to be truly superb at the claims stage. Now, I know as underwriters you may hate claims, and you may think also that us brokers are only interested in one thing, and that's commission. You could be slightly right, but in truth, there's one other thing that every broker absolutely loves. And that's a claim occurring where the underwriter responds, settles the claim to the client's complete satisfaction. Honestly, if from a broker's perspective, that is just the best thing that can ever happen. The client becomes a client for life. The client's attitude to insurance purchasing changes overnight. And all of a sudden, all of the shopping around and all the transactional pain that we go through every day just disappears. If I could wave a magic wand, I'm not sure our underwriters would go for this, but if I could wave a magic wand, I'd want every Aston Lark client to have one significant claim that we can sort out for them in record time. That of course is counterintuitive, but I think as a profession, if we write a product, we should really stand up to our promises. And if an MGA behaves like that, the reputation will spread and you'll have a super successful business, because it really is. When I meet with clients for the first time, you have a few sayings that you end up trotting out. You're normally at a table, there's normally a coaster on the table, and we spend all of our time discussing the coaster, which is the premium, and nowhere near enough time discovering the table, which is the risk. And actually, once clients have had a claim and they've had a loss and it's been settled, from there on in, everything changes in that relationship. And for an MGA, I think if you guys can stand up, pay those claims quickly, efficiently, promptly and fairly, then you will get customers for life. So, opportunities do await for hungry MGAs. I think MGA's got a fantastically exciting place in this market. If you're small and nimble enough to differentiate your products and services, and you're the small predators in the savannah, which is heaving with lumbering great competitors, you can build a great business by nibbling the backsides of a few insurance company hippopotami out there. And if you provide products to brokers that help them look good in the eyes of their customer, you'll build a great business. And my little checklist to guarantee successful trading with insurance brokers is as follows. So be different. Own your own niche. And those niches, you might automatically think, oh, it's an industry class, but it doesn't. It can be all sorts of things. The niche could be a particular size of customer. It could be the nature of a customer. It could be a customer that has a corporate buying committee. It could be it could be a family-owned business. It could be going for, you will only write owner-managed businesses. You'll only write businesses that have had a big claim. You'll only write businesses that have had loads of little claims. Whatever your niche is, just own your niche. Really, really focus on what your niche is. Number 2 is make sure your capacity is financially secure and rated, or you just won't get quality brokers using your services. Make sure your claims service is superb. Don't skimp. Use claims as an opportunity to secure clients for the long term. Innovate. Brokers have to bring new ideas to their clients. It makes us look good. As I say, if we rock up and it's, oh, yeah, well, we were with this MGA the other day and they've come up with a product that's really super for you, Mr. Client, it makes us look good. It makes us appear that we are doing nothing all day other than worrying about our clients, which, of course, is broadly true. Consider the quote journey. Help brokers make it as swift and easy as can be. Lengthy proposal forms and 2-week turnarounds are a huge turn-off, and we still see it. I get contacted by underwriters all the time saying we want to grow in this sector or that sector, and then the first opportunity comes up and you just get the underwriter emailing you an enormous, great proposal form. And you've sent a presentation to the client, to the underwriter, and then they send you back a proposal form. And I kid you not, we still get proposal forms back where the first few questions are name, address, and you think, really? In 2021, we are still asking people to complete their name and address in biro on a proposal form. It's like, if ever there's an opportunity for MGAs to sort something out, that would be a great place to start. Specialise. Repeating point 1, MGAs absolutely must have a unique proposition. Trying to take on Aviva's marketing budget on brand probably won't end well for you. I think the expression is your arms are too short to box with God. You have to become known for something specific instead. Consider your go-to-market strategy. Should you be friends with every broker, or will you be more successful by focusing on an exclusive panel? Risk and reward with both approaches, and it does rather depend on the nature of your product and whether you're selling a low volume, high value, or a high value, low volume. There are different approaches, but actually, from a broker's perspective, there's a big old fear of missing out thing going on there. If we know that we can just contact an MGA, get an indicative quote, and then use it to place it with our mates, unfortunately, that's what a lot of brokers will do. If we do that 3 or 4 times and the MGA contacts and says, game's up, guys, either place business with us or we're pulling your agency, it's amazing how behaviour changes. And I actually think MGAs should be a bit bolder sometimes and actually just select your partners, select your friends, decide who you're going to work with. You will get a better outcome. I know it's tempting to be friends with everyone and get inquiries coming in, but you can be busy fools. And if you're converting 1 in 6 of the inquiries you get through the door, then consider your go-to-market strategy and think about whether actually there's a better way of doing it. And get your name out there, and not just in the insurance press. I think it's so, whenever we all take on our PR and marketing guys, they all spend loads of time talking to other people who already know who we are, which is fascinating. But actually, I would far rather that as an MGA, if you focus on construction, well, you should be spending all of your time in the construction press, not the insurance press. Go directly to the source of where you're focusing your efforts. If you do a good enough job in that regard, then brokers won't be able not to use you, because actually clients will then say, well, I've heard about this company. They turned up at our conference last week and they were talking about risk and they were talking about that. Have you tried them? That's kind of from an MGA's perspective, that is a great way of winning business. So look, it's been a real privilege to speak to you today. As I say, I think that's the first face-to-face speech I've done in a very, very long time. And I did say to Charles, I'm more than happy to throw it open to any questions from the floor, because it's I didn't have a brief other than just to say, look, what do brokers like about MGAs? What do we want to see in our MGAs? And I know I've probably asked for lots of stuff that's very, very difficult to provide, but honestly, that simplicity, speed of response, fantastic service, carving out a niche, being innovative. If you can just deliver all that for us, that would be absolutely marvellous, and we will all be friends for life. Oh, commission, obviously commission. That's a given as well. So Charles, I hope that was helpful. And any questions from the floor? Where's Ashwin Mystery when you need him? Hi there, James. Come on. James, can I just ask you to stand up for a second, because James, there's a bit of a clue in what James does here, and it's in his dress code. James is co-chair of InsurTech UK, so he's an InsurTech, so it's obligatory that he wears a T-shirt.
Actually, is this on? Can everyone hear me?
It is, yeah.
I was really interested, you were saying about the micro brokers being a gold mine for MGAs. Obviously, micro brokers can now be InsurTechs, right? Startups that are struggling for capacity and support. Do you think there's a strategic opportunity for MGAs to start kind of going in early and helping the micro brokers so that when they kind of bundle together and start to get a bit bigger, they've got a bit more leverage with you as a panel play consolidator who obviously, as you say, justifiably points your brokers towards the bigger panel players. Is that an opportunity for MGAs?
I think it's a massive opportunity, and I think actually that's what actually happens in practice. And a real practical example of that is I'm going back 25 years ago at least, when I first started dealing with a little MGA called Lonham Marine Underwriters over in Ipswich. And I was running a very small business, Lonham's were a very small MGA, and we partnered up to attack a couple of sectors together. And we went after car transporters, and we now have 80% of the UK car transporter market, and we still trade together, and it's a fantastic long-term. That is properly carving out a niche. We co-wrote the wordings. We went up, we found out what the problems were, solved those problems together, and then grew together as businesses. I think that's probably the best example of partnering that you can have if you've got a shared vision for how to actually solve a particular problem. And let's face it, look, there are every sector has got its problems and every niche has got its challenges, and it's just about uncovering what those challenges and problems are and finding a willingness to solve them. So absolutely partnering is from the ground up. Yeah. Thanks, James. There's one over there. Yes, Charles.
When you speak to customers with an MGA that's supported by a well-rated insurer, do you introduce the quote as this is supplied by the well-rated insurer, or do you say it's supplied by this particular MGA?
It depends. If the MGA is not differentiated, then we reference the insurer. If the MGA is truly differentiated, then we reference the MGA. Basically, I know they've changed their name now, but we used to do a lot of business with OAMPS. Backed by Zurich. So, what better name than Zurich to put out there? But actually, OAMPS were even better known in their sector than Zurich. So I think it just depends on the sector and depends on the niche.
Hi.
Hello.
Freddie Knight from Cyber MGA, Optimum Speciality Risks. So I thank you very much for sharing some of the things you'd like to see for MGAs that make it work better for the brokers. But have you got one or two things in mind that you see from a lot of MGAs that perhaps you'd prefer if they didn't do, or some steering points that would be better to work on?
I think it's actually, the biggest one has got to be, I think unfortunately, MGA, when you go to your capacity providers and you get capacity, sometimes those capacity providers put requests in that I'm not sure they know why they're asking some of the questions that they're asking for, and you end up with ridiculously long proposal forms. And it's just kind of, my humble opinion, a lot of it is just the capacity providers covering their own backside.
Agreed.
And they insist on you having a 55-page long questionnaire that asks the inside leg measurement of the financial director's stepson, and it's just unnecessary. And if MGAs could push back on that to think about user experience and think about the customer journey, and not just from a client perspective, but from a broker's perspective. I have made countless decisions over the years not to place business with a particular market just because life is too short to fill in their proposal forms.
Totally agree. Thank you.
Oh, one over there. Keep him. There's only one microphone guy. He's really busy.
Hi, Will Wood from Instander. You've talked about niches quite a lot, Peter. I'd just be really interested in your view and what the key trends are that are coming up where you think MGAs could maybe start to concentrate in the future.
I think it's about, well, there are several things. You've got the industry classification, actually, so finding industries that have got particular problems and challenges, and there are a whole host of those. And like it's a simple example off the top of my head, if you're in the haulage space right now, if you can actually carve out a product and persuade your underwriters that you will be super flexible when it comes to taking on young drivers and trainee drivers and drivers without experience, then you'll get a lot of fans in the haulage market. It's about spotting the opportunities at the client end and then working with brokers to solve those problems. When I first got into car transporters, we realised that there was a fundamental problem that all of the policies in the market excluded theft when the keys were in the ignition. And every single car transporter in the land leaves the keys in the ignition every single time they're loading and unloading vehicles. So it's just this fundamental, really, really simple problem that actually once the underwriters understood that problem and we solved it, then all of a sudden, it was literally like taking candy from a baby, because you'd phone up a client and say, did you know you haven't got any cover for that? They'd panic and appoint us. It was kind of, it's literally that simple. It's about finding the opportunities with the end customer, I think, and then carving out the solutions for it. Need someone over that side of the, oh, no, middle, okay.
The back of that, Peter.
Oh, sorry, Hannah, I can't hear you.
You need to just speak into it.
Okay, thanks. Touching off the back of that, looking at it from the underwriter understanding the niche, for us specifically now setting up as a crisis management malicious risk niche, it's, I think, harder for us from the broker's perspective to try and have the brokers understand that niche to go to their clients. And do you have any advice around that?
Oh, God, yeah. I mean, yeah, you've hit the nail on the head. Unfortunately, the natural reaction of brokers is if they don't understand something, they just won't mention it. I think that was certainly very, very true of cyber insurance a few years ago, and is still true of cyber insurance. We've now got a full-time member of staff who does nothing but training up the rest of our members of staff so that they're brave enough to actually discuss cyber insurance and know what they're talking about. Yeah, that is a huge challenge, because people will just avoid mentioning something if they don't understand it. I do think also there's some challenges with that. Sometimes lots of startups, and I'm not suggesting your one is, but there are lots of startups that try to solve problems that if clients haven't even considered that it's a problem and they're not aware of the problem, then actually they don't like to spend money on things that they don't think are a problem. And even though they may well be a problem, but it's a real challenge. You can only solve a problem when people perceive there to be a problem. And actually educating the whole world about something is a bit of a challenge. It's things like intellectual property insurance. Theoretically, lots of companies should buy it. Practically, nobody does. It's one of those weird things that you can only solve a problem that's actually perceived. Any more for any more?
I'll try to shout. Just it says challenges now. What would be your biggest challenge right now that keeps you up at night?
Our biggest challenge, well, integration would be the obvious thing to say. We are a massive believer in acquiring brokers and integrating them. And when I say integrating them, I mean making sure that they, I want in 2 or 3 years' time, if any of you guys talk to any Aston Lark office, I want you to get a sort of a consistency of response and approach, and a consistency of service to clients that's really important. So integration, probably the biggest challenge. We talk a lot about joining the dots, making sure that every time we buy a broker, if they've got a particular niche or a specialism, and we think that could be helpful to other parts of the group, making sure that we communicate that and actually get that communication going across the piece. And that could be a great opportunity for MGAs. We are, each time we buy a broker, apart from getting some sticks of old furniture and some rubbish old laptops, the main thing we're buying are people. And actually those people, every time we buy a broker, there is nearly always, they come with a relationship. And some of those relationships, a bit like when Oval acquired FMW back in 2007, I had the Lonham relationship, and then that became an Oval relationship. And we try to take that approach as well. If we buy a broker and they've got a great relationship with an MGA, and between them that's resulting in growth, great client service and a good client outcome, well, we will absolutely support that to the hilt. We will not dogmatically move business out of MGAs into big carriers just for the dogma. we only do it because actually, if the MGA is not differentiated, then and a composite carrier comes up with an equally attractive solution, clients will often vote for brand. But if the MGA is providing a really, really great service and we acquire a broker that's got a great relationship with that MGA, we will absolutely look to expand that relationship across the whole group. Sometimes the MGAs that we find in those relationships are quite small, and that introduces service challenges. If we can solve the service challenge and we can find a way of trading with the MGA on a wider scale, then that would certainly tick our box, and I'm sure it would tick the boxes of the MGAs. So, any more for any more? Well, I think that probably means, Charles, that my time is up. So thank you, everybody, and speak to you soon. Thank you.